Hey guys, this is a market update. In this video, Bitcoin and Ethereum prices fairly weak over the last few days. We're going to contrast that with a signals report from Fidelity. They're going through more on-chain and fundamental data. You can see very positive outlook for them, but how does that relate to where we are in the current kind of price phase of the market? So getting on to the Bitcoin price first. We've had a huge surge in demand for both Bitcoin and Ethereum. Transaction fees are crazy right now, mostly due to meme coins, more speculation. Now, that usually comes towards the end of an impulse in the market. That usually comes towards the end of a bull market. I don't think we're in a bull market right now. The part of the phase that we're in is actually the consolidation before the bull market, which is probably 2024. For right now, we've had this huge move up, which for this part of the phase has actually been very, very strong. And so for me, a consolidation is something that I would prefer here. Moving up much higher would really take much more strength within the macro economy. And that's not really the part of the phase that we're in right now in terms of the macro cycle. Definitely has changed and we've priced that in, but the climb up towards really this territory needs a much stronger macro, and that just isn't really where we are at right now in that phase. Now, in terms of this part of the cycle as well, the meme frenzy that has happened over the past week or so is probably a signal of just a top of the current, trend upwards as well. You can see the RSI here on the week chart is actually still fairly okay, but obviously this is slower moving. RSI moving up, so that's the strength, and the price moving up still hasn't broken out of this channel. So on the week charts, there's really nothing to worry about. If you go down to the day chart, you can just see it a little bit more clearly how short term, the strength of this price movement is just kind of falling away a little bit. So again, the relative strength is moving down, making lower highs, whilst the price was making higher highs. A little bit of a divergence there, a little bit to worry about, maybe some weakness or some consolidation. You can see for the price as well, kind of failed to it made a high here, but is now coming down into this part of the channel. So yeah, this is important. This will depend on macro. If macro is, changing for getting a bit better, then maybe we'll start moving up again. But as you can see, that phase of the market where the short term really had this impulse just seems to be done right now. And the market's just going to take a breather and look to the macro into where it moves next. So that's how I'm seeing things, just not bullish or bearish, just consolidation for me would be the best thing. We've had this phase now, it's over. We need to wait until the next phase and the macro will tell us that. If you're a trader though, Bybit deposit bonus down in the description. You can get up to $30,000 depending on how much you deposit and trade. Check the details via the link down below. Coming to the Fidelity report, they're very positive about all of the on-chain data they're seeing. So again, it just supports this move out of a bear market. The price action right now, maybe it's got a little bit ahead of its skis and it needs to consolidate more. What you're seeing here is net unrealized profit and loss, or NUPL, just spiking up from the bear market bottom. You can see each bear market low right here, and then you get a move up. So that's a very positive sign. And of course, you don't go up in a straight line. So we're still not anywhere near what I would call over exuberant prices, which is really like up here, yellow and green, as you've seen here. We're nowhere near that right now. So for me, still happy to buy on weakness, but it just shows that the cycle potentially is changing. MVRV Z-score shows exactly the same thing. So again, what it does is every bear market bottom, it just comes down into this zone. And what you can see is we've come out of that zone now. And that's important because every previous time we've come out of that zone, it's pretty much the end of a bear market. But of course, Bitcoin being so volatile, you can come out of the bear market, still get a 30 or 40% drawdown from the impulse that you get. And so people may be confused or worried looking at this price thinking, wow, it's going to come down 25%. Now, what's happening right now? It's actually totally normal for Bitcoin to move 30%. We've seen other data from Glassnode. You see other bull markets. 30% drawdowns are actually totally normal, not even unexpected, absolutely normal. They happen 5, 6, 7, 8 times within bullish impulses to the upside. So it's actually completely normal price action that shouldn't even be questioned. But the important thing is for here is that every time MVRV Z-score has started to climb out of this zone, that's been the start of a huge bull market. What I like to call the chart of truth is something Fidelity is showing here as well. Bitcoin active addresses over time. So what we can see here is this is transaction count, this is new addresses, and this is active addresses. Just up and to the right, this is a growing network. So this is the amount of people coming on using Bitcoin over time is going up and up. And so that's really the only thing you need to be aware of if you're investing in an asset, are more people using it over time, because that's where the value comes from. Now, with ordinals and inscriptions and the huge spike in gas fees right now, it just is what it is. It's a network that's growing. It's not perfect. There are layer 2 solutions that are coming on. They are coming on slower than people would like. That's just the way it is. You can't really change that. Actually, what happens when you get these spikes in fees is that it incentivizes more development and activity to create solutions. And so that's just the way I see it. It's a short-term blip. These things will happen over time. If Bitcoin is to be a genuinely decentralized network that's open to all, then you're going to have a ton of stuff on there that you or I potentially don't agree with or think is wrong or not the best solution. But that's just the way it is. I think in general, these are just going up, and that's all I really want to focus on, is just monthly addresses, adding more humans over time, which creates more value in general. Wherever the most humans are doing the most stuff, I think the most value accrues. So this is just really the chart of truth, as I like to call it. Something that Ethereum is doing far faster than Bitcoin is scaling. We can see that data play out here. This is monthly address metrics going down for all of these metrics in a downtrend. New addresses, active addresses, transaction count going down on the base layer. You can see new address momentum really in a downtrend as well. It's kind of coming out of this bear market here, but definitely in a longer term downtrend. I doubt it will find a level, right? It's not going to go down forever. But momentum of new addresses definitely lower. That only makes sense when you look at layer 2s and understand that really that's where all of the new scaling and adoption is happening. So a year or so ago, Ethereum was doing all of the heavy lifting, most of transactions all on the base layer. Fast forward to today, you have Arbitrum doing as many, if not more, transactions per day than Ethereum. So you've created a second Ethereum, and that's what people are using. So looking at the base layer here is slightly misleading. If you look at the culmination of transactions that are happening on Arbitrum, Optimism, also Polygon, ZK, EVM, Coinbase are making Base, which is going to be their layer 2, a huge amount of customers coming on. So scaling is necessary. Ethereum is doing it successfully right now. In terms of Bitcoin, the Lightning Network is a payments network. You can see it is scaling as well. We have basically an all-time high for capacity. Channels are down a little bit, but really it's about capacity. 5,500 Bitcoin, though, is nowhere near enough, right, for worldwide scale. It needs to be a lot more than that. But the only thing that really pushes people to actually use it and develop it more is higher transaction fees. And so you're just going to have to go through these growing pains. The main thing, though, is that the networks are scaling slower than people would like, but they are. And that's because the real demand is there to have them. So that's really the underlying case, is that if the demand is there, then I'm happy to keep investing in them. Short-term price action looking fairly weak or neutral then. The narratives that pushed us up here have faded now, and the market needs to find new narratives to push the price in one way or another. Fundamentally, both of these networks are growing though, like you saw. If you're a trader, Bybit deposit bonus up to 30K, link in description for that. You can find the details down below. I'm James with MoneyCG. Cheers for watching, and I'll see you in the next one.